welcome to week 6. Hope you guys are hanging in there. So we got week 6, Quiz Access Chapter 3. And we're going to use this information to fill out this journal right here. So for each of the separate cases, prepare the required December 31st year-end adjusting entries. These are going to be adjusting entries. So depreciation on the company's wind turbine equipment for the year is $6,200. That's going to be a depreciation expense. So on our T account over here, we notice that expenses are debits when they're increased. So 6,200 depreciation expense equipment. And then the accumulated depreciation is the equivalent credit. Now we're going to jump into prepaid insurance account. For the solar panels had a $3,200 debit balance at December 31st before adjusting the cost of any expired coverage. Analysis of prepaid insurance shows that $1,200 of unexpired insurance coverage remains at year end. So we had $3,200 debit balance of prepaid insurance, which is an asset account. So, and at the end of the year we only had $1,200, so it was a decrease, a credit of $3,200 minus $1,200, $2,000. So prepaid insurance. And that was an insurance expense that brought it down of $2,000. The company received $6,600 cash in advance for sustainability consulting work. As of December 31st, 1/3 of the sustainability consulting work had been performed. So 1/3 of 6,600, we already know we're dealing with 2,200 right off the bat. So 1/3 of the consulting work had been performed. So we know there's revenue involved, and we know there's unearned revenue involved because we hadn't done any work to get that revenue. So as of December 31st, we are doing 1/3 of the work. And revenue is a equity account, so we're going to credit that with 2,200 revenue. And that's services revenue, and our unearned revenue, which was 6,600, is going to be debited, and unearned revenue is a liability, so it's going to be debited. It's going to be subtracted by 2,200. There we go. As of December 31st, 2,400 in wage expenses for the organic produce workers has been incurred but not yet paid. So we have wage expense but not yet paid. So a wage expense and wages payable because it needs to be paid. So expenses, again, it's a debit account, so we're going to 2,400 here. Wage expenses, wages payable, 2,400. As of December 31st, the company has earned but not yet recorded $520 of interest revenue from investments in socially responsible bonds. The interest revenue is expected to be received on January 12th, so the interest revenue has not yet been paid yet. we have earned but not recorded 520. So we have earned the revenue. A revenue is equity. So we can do interest revenue. It's a credit account, 520. And we will receive the interest, so interest receivable of the equivalent amount. And let's see how we did. There we go. Good job, guys.